Imagine waking up in 2026, scrolling through your portfolio, and seeing that 50,000 VET you bought for around $1,408 have ballooned in value. Before we dive into the details, if you want to trade crypto, I trade on WEEX. It's a reliable exchange with deep liquidity, low fees, and a massive selection of coins. You can claim up to $30,000 in sign-up bonuses and trade with up to 400x leverage. Sign up now with the link in the description, deposit, start trading, and claim your bonus. No KYC required. Now, back to today's question. How much could 50,000 VeChain tokens be worth by 2026? We'll walk through the current price, the latest network upgrades and partnerships, real-world business adoption, expert forecasts, and 3 clear scenarios: conservative, realistic, and bullish, to sketch out the full range of outcomes you might expect. VeChain is trading at roughly $0.02816 per token. That means 50,000 VET represents about a $1,408 investment today. Over the last year, VET has wandered between $0.022 and $0.035, reflecting both broader market volatility and specific news around VeChain's enterprise integrations. But underneath that sideways price action, the ecosystem has been quietly ticking off important milestones. The dual token model, which separates VET, value carrier, from VTHO, utility for transactions, remains one of the few designs that decouples speculation from network usage. POA2, VeChain's hybrid proof of authority upgrade combining Byzantine fault tolerance with Nakamoto consensus, went live in early 2025, delivering instant finality and bolstering security, critical for enterprise clients. Over the past 6 months, we've seen major technical enhancements aimed at scaling the network and improving governance. The Stargate staking program on Gate.io allows VET holders to earn additional VTHO rewards and protocol voting rights, strengthening the incentive for long-term holding. Developer tools have improved, with new JavaScript and Python SDKs for smart contracts on VeChain Thor, and the Hooks module now supports custom transaction logic. These upgrades signal that VeChain isn't resting on its supply chain laurels. It's beefing up for a broader wave of decentralized finance, tokenized assets, and carbon credit applications. Real-world adoption remains the beating heart of VeChain's value proposition. Over 60 global enterprises, including BMW, PwC, DNV, and Walmart China, have leveraged VeChain Thor for supply chain transparency, asset tracking, and digital certification. In early 2025, BMW announced it would use VeChain's digital twin solution to track high-value components from manufacturing to assembly, reducing warranty fraud and improving recall efficiency. PwC rolled out a services on VeChain framework that helps their corporate clients integrate immutable audit trails into financial reporting, while DNV launched a pilot for carbon emissions tracking that tokenizes environmental impact data onto the blockchain. Partnerships in the sustainability sector have picked up steam too. VeChain teamed up with 4Ocean in Q1 2025 to link waste collection efforts with on-chain traceability, using VTHO to stamp proof of collection and tokenized rewards for volunteers. More than 100 tons of ocean plastic have now been tracked and verified via VeChain's network. In the energy sector, Italy's ENI is exploring tokenized carbon credits on VeChain Thor as part of its roadmap to net zero, potentially turning VET into a key settlement unit for global carbon markets. On the financial side, integrations with payment gateways like Stella Pay allow users to convert VET rewards into fiat via Visa-enabled debit cards, bringing crypto into everyday transactions. In March 2025, a pilot program with a Southeast Asian remittance provider showed a 35% cost reduction compared to conventional money transfer services, thanks to the speed and low fees of VTHO-powered transactions. These pilots underscore VeChain's promise as both a payments layer and a digital asset platform. When it comes to forecasts, data-driven models give us a spectrum of possibilities. Gov.Capital's algorithm, which analyzes historical volume, cycle patterns, and comparable assets, suggests a VET price of around $0.0487 by mid-2026, about a 73% increase from today's levels. FlitPay's outlook is more bullish, projecting an average VET price of $0.0889 in 2026, with a floor of $0.0443 and a ceiling of $0.142. Those figures imply that your 50,000 VET could range from roughly $2,215 in a mild bull cycle to as high as $7,100 in a strong uptrend. Let's break that into three scenarios. In a conservative case, assume VeChain continues accumulating enterprise pilots, but sees no dramatic spike in token demand. Regulatory clarity around blockchain remains mixed. Global economic growth is modest, and crypto sentiment drifts sideways. In that environment, VET might nudge up to between 4 cents and 5 cents by late 2026. That would value your 50,000 tokens at $2,000 to $2,500, a steady 42 to 77% gain over today's price, roughly in line with a cautious bet on a mature tech asset. In a realistic growth scenario, we assume the Stargate staking program attracts significant VET lockups, POA2 upgrade drives enterprise interest, and VeChain lands several government-backed pilots, perhaps more central bank digital currency experiments leveraging VTHO for transaction settlement. If VeChain crosses into broader Web3 use cases, with DeFi, NFTs, and tokenized funds on VeChain Thor, VET could trade between 8 cents and 10 cents. That puts your 50,000 VET at $4,000 to $5,000, a transformative return of 184 to 255% that aligns with more traditional altcoin bull markets. In a bullish moonshot scenario, picture everything clicking. VeChain secures strategic partnerships with Fortune 500 companies. XRPL hooks powers advanced financial products. A major retailer integrates VeChain tokens into loyalty programs, and centralized exchanges offer institutional custody without reservations. Bitcoin revisits $100,000, and macro appetite for blockchain deepens. Under those conditions, VET could break above 20 cents, potentially reaching 25 cents by late 2026. Your 50,000 tokens would then be worth $10,000 to $12,500, an 800 to 1,000% return from today's prices. Of course, high rewards come with high risks. VeChain's success relies on sustained developer engagement in a crowded enterprise blockchain market, favorable regulatory developments for proof-of-authority networks, and continued confidence in the dual token economics. Competition from Ethereum rollups, Polkadot parachains, Hyperledger Fabric deployments, or Swift's own blockchain initiatives could capture market share. A macro downturn, rising interest rates, or a harsh regulatory crackdown on crypto could pull token prices back toward the low 2-cent range. Yet VeChain's track record of resilience cannot be ignored. After peaking near $0.245 in April 2021, VET plunged below $0.015 by mid-2022, only to recover above 4 cents in early 2024 on renewed enterprise news. That bounce back demonstrates that real adoption stories, not just social media hype, underpin VeChain's value. With mainstream headlines in 2025 highlighting supply chain wins and sustainability use cases, more investors are recognizing VET as a tangible bridge between physical assets and blockchain. By the end of 2026, your 50,000 VET stake could occupy very different positions in your portfolio. If you're risk-averse, targeting the conservative $2,000 to $2,500 outcome might suit you. If you're seeking significant upside with measured risk, the realistic $4,000 to $5,000 range feels attainable. And if you're bullish on enterprise blockchain's next wave, the $10,000 to $12,500 moonshot isn't out of reach, provided you can stomach the volatility along the way. In the end, VeChain's dual token design, growing list of enterprise integrations, robust technical upgrades, and improving macro environment give it a solid foundation for growth. At today's price of around $0.028816, 50,000 VET is a mid-four-figure speculative bet on the future of supply chain transparency, tokenized assets, and mainstream blockchain adoption. 2 years from now, that position could have doubled, quadrupled, or even decupled, depending on how these scenarios play out. So tell me in the comments, which path do you see VeChain taking? Are you playing it safe with a conservative growth target, or are you all in on the realism of a 200% gain? Maybe you're eyeing that 800% moonshot. Whichever camp you're in, thanks for watching. If this deep dive helped you, hit like, subscribe for more blockchain analyses, and ring the bell so you don't miss our next video. Here's to making smart moves in crypto. See you in the next one.